Welcome everyone. I hope you're having a great day. Thank you for joining today's webinar where we'll talk about how to invest in pre-IPO and private stocks in your self-directed IRA. It is top of the hour and I do want to be respectful of your time. So let's just go ahead and get started. I'm Reneika Lightbourne with Advanta IRA. I'm excited today to be joined by Blair and Spencer Francis from Linqto. Welcome and thank you both for being our featured speakers.
Yeah, thanks Reneika. Thanks for having us on today.
Absolutely. Spencer and Blair will guide us through the essentials of private equity and pre-IPO stock investments and explain how you can simplify investments, simplify the process through your self-directed IRA. Before I turn it over, I do want to give you a general overview of self-direction and how it works. Also, if you have questions, feel free to put those in the question box. We'll allocate some time at the end to get those answered for you. Again, my name is Reneika Lightbourne. I'm one of the business development specialists here at Advanta. I've been with Advanta as an employee since 2019, but I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I advocate both personally and professionally. Just as a side note, or my investor hat, I personally used the Linqto platform to invest in private stock in my retirement account. After today's webinar, if you have questions, you want to talk through your exact scenario, if you have just a question about self-direction as a whole, you're always welcome to give me a call or send me an email. I would also encourage you to visit our website. It's a great resource for you for anything and everything related to self-direction. Just a little quick disclaimer before we get started. At Advanta IRA, we don't give any tax, legal, or investment advice. We're also not affiliated with any other companies. All of the information that's going to be presented today is just for educational purposes. So as always, we always encourage you to consult with your professional team, whether that's talking to your CPA, financial advisor, or attorneys before making any investment decisions. Just a quick takeaway, if self-direction is a new concept for you, just remember that any IRA or former employer plan, like an old 401k or TSP plan, qualifies to be self-directed. Two, you're always in control. You choose the investment that works best for you. So if it's something that you hear in a call relating to private stocks, you can certainly invest in that in your IRA. And then just knowing that all of the income that's generated from the investment flows back into your retirement account. A little history about Advanta and who we are. We've been in business for 21 plus years as the leading self-directed IRA administrator in the business. While we don't give any tax, legal, or investment advice, our team is comprised of attorneys and also certified IRA service professionals. Our headquarters is in the Tampa Bay area. Advanta have an office in Atlanta, which is where I'm based, but we do work with clients nationwide as we have a little over $3 billion under our administration. In addition to providing you, our clients, that concierge style service where you have a dedicated account manager, we also have guest speakers and experts and practitioners from Linqto and other speakers that come in and knowledge share with you on some investment opportunities that you can do within your retirement account. This webinar, again, is recorded. It will be uploaded onto our YouTube channel later today. You can always access it on our video library. I would encourage you to continue to check out our events pages for other free educational content, but also to our podcast, which is hosted by my colleague, Alex Kearney. So exactly what is a self-directed IRA? Just very simply, just know that you get to decide exactly what works best for your IRA. You have complete control over the investment decisions. You have complete control over your retirement funds to where you get to diversify outside of the traditional stocks and bonds. Most clients use IRA funds to invest in real estate, whether it's going to be a single family home or a rental or a commercial unit. You can certainly use IRA funds to invest in notes and mortgages, private equities like we're going to be talking about today, but the list is near limitless in terms of what's on the table for you. So why do people choose to self-direct? You can look to self-direct for many different reasons. I'll just touch on 3 of them. 1, it can be a new source of capital for you. So instead of taking out an emergency, tapping into your emergency fund or taking out a bank loan, if you have funds that's sitting idle in an old employer plan or an existing IRA, you can elect to move those funds over to make your investment. Or if you're a capital raiser, there's literally trillions of dollars just sitting idle in retirement funds that allow you to tap into those resources to invest in that startup company or start that startup company. Another reason as to why someone may look to self-direct is because of the ups and downs, the volatility in the stock market. You can use IRA funds to diversify outside of the traditional markets, investing in the private companies and new innovation technology if that's your interest. And then, of course, the tax benefits, having those rents, those profits, those dividends flow back into your retirement account tax-free, and then the distribution being tax-deferred or tax-free, depending on the type of account that you have. In terms of the type of accounts that can be self-directed, it's the ones that you're already familiar with. So if you were to go to the IRS website, you won't see the term self-directed, you'll just see traditional or Roth. Specifically for individuals, traditional IRA just means you get the tax break up front, you grow your account over time, and the distribution, you'll pay taxes at that point when you take it out, retirement age of 59 and a half, or once you reach RMD where you're forced to now take it out. Whereas with the Roth IRA, you get to pay the taxes up front, grow your account over time. As long as you've held that Roth account for at least 5 years and you're 59 and a half, your distributions will be tax-free. If you are an entrepreneur, you have a side business, or you have a small business, the accounts that you can look to self-direct are SEP, Simples, and solo 401ks. Solo 401k typically have greater flexibility, so if that's of interest to you, you want to see if you're eligible for it, you're always welcome to reach out to myself or someone on my team to do a consultation on solo 401ks. Some lesser accounts that can also be self-directed but are just as important are educational savings accounts that you can look to self-direct for your children to cover their educational expenses. And then, of course, health savings accounts. If you have a high deductible medical plan, you would be eligible to self-direct. You do want to consult with your plan provider to ensure that it is a high deductible plan. Also, any former employer plan, again, whether it's an old 401k or 403b or a TSP type plan, can be self-directed. The only thing I do want to reference here is if it's a current employer plan and you're not yet 59 and a half, which is the retirement age for the IRS, most times they'll restrict you from moving it, but you can certainly ask to see if they'll make an exception for you. If it's a former employer plan, you have complete autonomy to move those funds. In terms of funding your account, there are several ways you can fund. You can do a combination of either transferring funds from an existing IRA. So example, if you have an IRA at a Fidelity or Charles Schwab, you can move as much or as little as you need to make your investment. There's no tax liabilities for you to do that. You're just simply moving from one retirement account to another. If it's an old employer plan from, like, say, a 401k, you have to initiate that process. You just let them know you're not taking a personal distribution. Again, it's just moving from one retirement account to another qualified retirement account. The other way that you can fund your account is by making an annual cash contribution as long as you've earned income. So for traditional IRAs and Roth IRAs, if you're under the age of 50, you can put in, for 2024, you can put in $7,000. If you're over the age of 50, you have an additional $1,000 to where you can contribute $8,000 total. Starting in 2025, between the ages of 60 and 63, you'll have the ability to contribute an additional $10,000. So just keep that in mind. Again, for employer plans, you have higher contribution limits, so that's a great benefit to you. Specifically, SEPs and solo 401ks, you can contribute possibly up to $69,000 if you're under the age of 50. If you're over the age of 50, for a solo 401k, you have an additional $7,500 that you can contribute for 2024. For ESAs, again, it's for educational expenses, it's $2,000 per year per child. And with an HSA, again, having a high deductible plan for individuals, you can put in $4,150. For a family HSA plan, you can put in $8,300. And also, if you're over the age of 55, specific to HSAs, you have the ability to put in an additional $1,000. In terms of getting started with us, again, you're always welcome to reach out to us directly, but if you decide you want to proceed or start your self-direction journey, the process is pretty straightforward for you. It's streamlined into 3 simple steps. You can go directly to our website, advantaira.com, complete the IRA application. You can do that electronically, typically within 15 minutes or so. We can get your account open once we have the complete packet within 24 business hours, and then we'll assign you a dedicated account manager who's going to be with you for the life of your account with us. So that's step 1, the onboarding process. Step 2 is funding. Again, you can use a combination of making an annual cash contribution as long as you've earned income. You can transfer from an existing IRA or do a direct rollover from an old employer plan. And then finally, step 3 is start investing. What is it that you're interested in? Will it be something that Blair or Spencer mentioned in terms of private equity opportunities or pre-IPO stocks that's of an interest to you? You can certainly use your retirement funds to make that investment. And with that, I'll go ahead and turn it over to Blair. Just bear with me one moment.
Awesome. Well, thanks, Reneika. That was a great overview of the retirement vehicles there. So today, what Spencer and I are going to be jumping into and talking about is unlocking potential in your portfolio using private equity and how you can invest in this asset class in your Advanta IRA and how simple that is. So we're with Linqto, and Linqto's vision is to democratize private investing by making it accessible and affordable for individual investors. Through an intuitive platform, Linqto empowers advisors and retail investors to engage in the private markets, which were previously reserved to the institutions and the ultra wealthy. So what are the things we're doing to remove those barriers and bring this asset class down to the everyday person and not just the ultra wealthy and institutions? So here are a couple of things that, or I would say there's really three main pieces that were necessary to solve to bring this asset class down to the everyday person. And one of those was simplifying the process, the arduous legal process that typically would take place to change hands of a private stock. The next is the minimums, bringing the minimums down from sometimes 100,000 or more down to as low as 2,500. And secondly is the fee structure, making it a fee structure that you can understand and the everyday person can jump into. So talking about turnkey access, I'll go through a little bit of a demo later on here just to show you what the website looks like and how easy it is to point, click, and make your investments. The investment minimums. So for your first investment, you can start out with a $2,500 investment, and then all subsequent investments are going to be at the $5,000 level. T plus settlement or T plus 0 settlement just means instant settlement. So when you come onto the website and you click place your order, that is going to instantly settle, and those shares are going to be going into the SPV in your ownership instantly. And the next thing here is the fee structure. So typically the way that this asset class was done in the past was through management fees and carried interest, which might be a fee on the back end, a percentage of your profits taken. Our model does not have any annual management fees or any carried interest on the back end. It's simply quoted as a price per share upfront. And lastly, investing through your self-directed IRA is very simple. I'll show you at the end as well how you can connect your Linqto account to your IRA account. So here's a quick snippet of the platform. As you can see, these are a bunch of different asset classes and different stocks that you can pick from. You can invest in your personal portfolio, or again, connect that IRA account and use that to invest through. So I want to talk a little bit about the market opportunity. So venture capital historically has been underallocated by individual investors. So what this chart is showing you here is institutions like pensions and endowments. They've been investing up to 30%, sometimes higher, of their portfolio into alternatives, while the individual investor is less than 5%. So there's a few reasons for that. A big part of that was access. So that's one of the barriers that we've taken down, is that access and giving you the ability to come in and make these investments. And if you look under the hood at the effect that private equity has on a portfolio, it makes sense why these institutions are increasing their allocation into this asset class. So what this chart here is showing you is, if you look down here, this is going to be your classic 70-30 stock to bond portfolio. And as you increase the private equity in this portfolio from 5 to 10, 15 to 20%, not only are you decreasing the standard deviation to risk ratio, but you're also increasing the annualized return on average. And if you look a little bit deeper under the hood at the companies that make up some of those private equity portfolios, it starts to make sense on why this shift is happening. And a big part of that is companies are staying private much longer than they used to in the past. So this chart here, what it's showing us is the most notable IPOs of their year. So Apple in 1980 all the way through to 2021 with Coinbase. And what you'll notice here is the blue line is the value that was created while the company was private, and the gray is the value that was created while the company was on the public markets. So what you'll see is a big switchover sometime in 2023. Companies, the lion's share of the gains was now seen in the private market before they went public. And I wanted to show a quick article that actually came out yesterday. This was from Bain & Company, a consulting firm. And they talked about how asset managers are increasingly looking to increase their allocation into the private equity space. So this graph here is showing you the black is the private equity, and it's expected to grow to about 30 trillion in assets under management by 2032. So again, the institutional capital is increasingly moving towards private equity, and we want to bring that asset class to retail investors like you and I. So here's a list of not a full list, but some of the companies in our portfolio that you can choose from and invest in. As you can see, plenty of different sectors to choose from. Two of the hottest right now have been digital assets and artificial intelligence. So I'm going to turn it over to Spencer. He's going to talk a little bit about the top 4 companies on the platform. And go ahead, Spence.
Thanks, Blair. So yeah, as you can see from the previous slide, we have about 80 companies available on our platform in a variety of different asset classes, but these 4 have been consistently the top invested companies for the last, I'd say, 6 months. As you can guess, the artificial intelligence vertical has been very popular for our members and has just been dominating the news cycle here. But first, want to start with SpaceX, a company I'm sure most, if not all, are familiar with. Elon Musk's rocket launch business, which is facilitating the creation and the baseline infrastructure for the space economy. And like Blair said, providing access to private equity in these pre-IPO companies is the main mission of Linqto, and I think SpaceX is a great example of that, where typically in the secondary market for individual investors, in our market research, unless you have $100,000 or usually $250,000 or more, you aren't able to invest individually in SpaceX. So through our platform, you're able to invest in a company that's facilitating the creation of the space economy for your first investment as low as $2,500, and then from there as low as $5,000. Not only is SpaceX doing about 85% of all planned rocket launch missions, either manned or unmanned, this year and last year, they also have Starlink under the umbrella. Starlink is a wholly owned subsidiary of SpaceX, which has a little over 6,200 satellites currently in orbit, which is providing satellite internet to most of the developed world at this point, North and South America, most of continental Europe and Asia, and they're currently expanding into Africa, India, and East Asia. So even if Elon did want to keep SpaceX private for the foreseeable future, he could look to do a spin-off of Starlink and take Starlink public as its own entity to provide liquidity if that's something that he saw as a viable liquidity option for their investors and employees also. Then moving on to XAI, another company in the Muskonomy. This is again Elon Musk's artificial intelligence venture, which has the assistant Grok, G-R-O-Q. And to us, the main differentiator between XAI, one, it's an open source model. So compared to OpenAI's ChatGPT and Anthropic's Claude, developers have access to the actual code and the language model that XAI is run off of, and they are able to build apps directly on top of it, and which just provides for fosters a community around XAI's language model, which we've seen in other like blockchain tech companies, where they're just able to access and interact with the processing system, which furthers the development much quicker than a closed source model. And then secondly, XAI has access to the Muskonomy, where all of SpaceX's rockets, all of Starlink's satellites, all X users, and all of Tesla's vehicles, that's going to provide trillions of data points that are all going to feed into XAI's model that no other competitor is going to have access to. And we see that as a significant competitive advantage. Moving on to a infrastructure play in artificial intelligence, Cerebras Systems. They are a chip maker based in California, and they have created a wafer scale processing chip, which is they are touting as the largest and most powerful processing chip powering the training of these language models. So while it's somewhat of a niche market where they're not looking to be the provider or the creator behind these apps that are run on top of these language models. The only thing that their chips are meant to do is take in these millions, billions, or even trillions of data points and create these language models, which are able to take in any question that you can ask it and provide an output quickly and efficiently and accurately. So they are directly competing with NVIDIA. Their wafer scale processing chip has about 50 times more computing power than NVIDIA's most powerful chip. And if you're just looking at the market cap of NVIDIA today, it's not like Cerebras has to take over 50%, 75% market share from NVIDIA to provide significant return to their investors. Based on NVIDIA's current market cap, if Cerebras Systems can take just 1% market share, that would equate to a valuation of about 75 billion, or a market cap of about 75 billion. And the offering on our platform sits right now around $8 billion of an implied valuation, depending on where you're investing. So again, if they're able to just cut out a very small piece of that pie from NVIDIA, they will be able to provide significant returns to their investors. And obviously, while I think there will be a time where artificial intelligence maybe isn't front page news of the Wall Street Journal every day, I don't see the development of these language models and the development of the AI industry slowing down at any point soon. And then finally, in the bottom right, we have Ripple Labs. They are in the digital assets sector in the blockchain infrastructure vertical of digital assets. Ripple is really the first company that was made available on the Linqto platform and has been the most popular company since our platform started in February of 2020. So while they do have their native cryptocurrency XRP, I feel like a lot of people, when they hear the term cryptocurrency or even digital assets, they start to cover their ears and don't want to hear anymore. So I don't want you to do that and just think of Ripple as a infrastructure provider where they are using their native cryptocurrency XRP as a way to facilitate cross-border payments. So they are looking to revolutionize and replace the SWIFT system, which is antiquated, I believe about 40 or 50 plus years old at this point. And if you've ever sent even a wire transfer or an international wire transfer, you know how cumbersome of a process that can be. It can take several days. And if it's your first transfer, there is a lot of skepticism and a lot of anxiety that you're sending funds, and who knows, maybe something may happen and you may not see them again. What Ripple and the XRP ledger and their technology is able to do is facilitate that payment in a matter of seconds and with almost 100% accuracy. Whereas through the SWIFT system, they're still around like a 98% accuracy, which again seems high. The analogy that resonates with me is that if 98% of your text messages or emails went through and you lost that 2%, I think very quickly you would look for a new service provider and look for someone that was sending 100% of your text messages. So Ripple is able to guarantee that and do that through the XRP ledger and facilitate payments not just from me to Blair within the United States, but from me to someone in Africa, in continental Europe, wherever you can think. And again, it happens seamlessly and immediately. So yeah, those are just.
Yeah, to jump in there, Spence, with Ripple specifically, right now, the quickest way to really get funds cross-border, as Brad Garlinghouse says, is to jump in a plane and fly them cross-border. So it's actually such a big issue that Ripple's able to solve with cross-border payments and digital ledger technology here.
Yeah, absolutely. And thanks, Blair. That was the really last point I had there. And these are just 4 of the companies that we have available. So through our platform, we have, again, about 80 companies available across a number of sectors. So what Blair and I always suggest doing here is just getting set up on the platform. Once you sign up, you can view all of the companies that are available, and you can filter by sector, by asset class. So just look at sectors and asset classes that are of interest to you. And if you find something that piques your interest and you have questions on, you can follow up with someone like myself or Blair, and we're happy to answer any questions you have about private markets in general or the specific company. So yeah, that's all I had, and thanks everybody for your time.
Awesome, thank you, Spence. And so yeah, I wanted to just finish up here and show you, if you already have an Advanta IRA, how simple it is to connect that IRA and start using that to invest. So if you set up a Linqto account, you can navigate to your account page and you'll see a screen here where you can go to entity and then add entity, and that'll be a quick 5-minute process to enter in the information, and within a couple of days we'll have that account approved. And lastly, just wanted to talk a little bit about, again, the barriers that we've changed, that it now brings this asset class down to the, to you in the audience here, which is the lower minimums and the simplicity of the point and click process. I just want to cover the structure. So the structure is done through an SPV, special purpose vehicle. So each time you're making an investment in a company on the platform, those shares are put into a special purpose vehicle, and you're now a limited partner in that SPV, giving you the proportional ownership of the shares. So we're going to open it up to some questions here. If you are interested in getting started on the Linqto platform, this QR code will bring you to the app to download on your phone and set up an account. And then feel free to schedule some time with Spencer or I. I'm happy to get you started on the platform, explain the funding process, go into more details on the individual companies or any other questions that you might have. So I'll leave that up here. And Reneika, do you want to jump back in and do some Q&A? I don't know if we have questions in the chat here.
Yes, definitely. There's some questions. Just bear with me one moment. Question is, what are the risks associated with investing in private stocks?
Yeah, it's a great question. So, this is the stock, right? So you're investing in private equities. So there is no guarantees. Stocks can go up or down. To kind of equate it to the public markets, I mean, the private markets can kind of range from really between a small to a mid cap. Sometimes it can be the size of a large cap, like with an Epic Games or a SpaceX. But yeah, you're making the investment and we're betting on this company's success. So there is potential to lose, but obviously we hope that we're gonna pick the right winners. One thing I will say to that point is, with our model, we're making the investment in these companies and then essentially selling the companies to you out of our own inventory. So unlike a broker, we do care about the company's success and the basics. So we do have a vetting process that our investment committee does go through. So it's not just any stock on the platform. We are doing some due diligence, but there are risks associated. You can lose the total investment. That is a possibility. So we need to say that, but we obviously hope that the ones we're picking are not going to be the losers.
And just to hop in there as well, so there is a minimum holding period of 90 days on our platform. After that 90-day window, we do offer liquidity through our platform. So our liquidity feature is us using our own balance sheet to provide liquidity to our members and buy those shares back. So it really just depends on if there is an active buy or sell side demand for that name that you're interested in selling. If it's not a name that our members are interested in investing in at that point, probably not a name we'll be buying back. But again, we do offer liquidity even when the company is still private. So that is an option after that 90-day minimum holding period.
Okay, because that was one of the questions, if there was any restrictions or lockup periods, and should someone be aware of that? Question is, since you don't charge any fees, how do you get paid?
Yeah, so and I can take this one, Blair. We make our money, and as Blair said, your all-in cost is the share price that you see on the platform. When we use our own balance sheets to go out and invest in these companies and buy these shares, and we charge a markup on what we buy the shares at in the secondary market versus what we offer them at on our platform. But that markup, the share price that you see, that is your all-in cost. A majority, if not all, of our competitors will operate on a 2 and 20 model where they may not charge a markup on the front end. There typically is like an upfront sales fee, which can range between like 5 and 10%. But even after that upfront fee, they are going to take 2% a year just for holding and custodying your shares, your asset. And then if And when the company becomes publicly traded, they are going to take typically between 10 and 20% of the profits on the back end. So while they're not, it's kind of similar to using a traditional versus a Roth IRA, where you're either paying the tax burden on the front end or the back end. And me personally, obviously, I'm by no means a tax advisor, but I would rather pay the tax burden on the front end on the smaller amount than hopefully when the company goes public, when you're being paid out a larger sum and not have anything taken off the top there. So again, that's one of the main advantages of our platform is when you invest, you know immediately what your all-in cost is and your cost basis is, and hoping that the company goes public at a valuation materially higher than that, and we are not going to take anything from you at that point.
Okay, another question, and keep the questions coming in, great questions, by the way. It says, what's Linqto due diligence process when selecting private companies? Can you touch on that?
Yeah, it's a great question. So we have an investment committee that vets each company, and they have a scoring methodology that they use. And so we're looking at a number of different tools that we're using, PitchBook and CB Insights, gathering as much data on these companies, looking at the total addressable market, the company's market position, how much momentum they have, are they reaching that escape velocity that they're generating revenue. So it's like anything else, proprietary system. It's partially quantitative, partially an art, and it really comes down to our investment team, our research team, and they're going out looking for companies that they think are going to do well in the public markets, and it's kind of a group investment specialist or investment committee that's making these decisions.
Wonderful. Yeah. So go ahead, Spencer, I'm sorry.
Real quick, and yeah, just one last point there, where another great benefit of our investment committee is that because we are using our own balance sheet and buying these shares in lots of, at times, several $1 million worth, we are able a lot of times to take a look under the hood and get access to more information and at times financials for these companies, which as private companies are almost never publicly available since they don't have to release any audited financials. So we are able to get a look under the hood and use that in our investment making decision process, which is typically never available for the individual investor in this market.
Okay, so I have a retirement related question, so I'll answer that, and then I have another question for you guys, so just bear with me. It says, Roth contributions maximum. Wife and I are currently using backdoor Roth transitions. We deposit new money into our existing IRA and then backdoor the transfers for the same annual maximum. Can we continue to do this, but then also use your organization's vehicle? And then I typed in the answer, so I'll answer that for the audience. And then he said, but is the maximum annual amount $8,000 for 2025, or is the limit that amount for each investment? So first, to clarify, a backdoor Roth is if somebody's a high earner, they may not be able to contribute directly to a Roth account. So what they can do is then contribute to a traditional, and then quickly thereafter convert it into a Roth account. So yes, you can do currently you can still do a backdoor Roth. And then, of course, you can elect to self-direct into any private alternative asset, whether it's something that, again, Linqto is discussing today, or another private assets like real estate or oil and gas. So you can certainly do that. In terms of the contribution amount for 2024, not 2025, if you're under the age of 50, you can put in $7,000. If you're over the age of 50, you can put in $8,000 individually each. So as long as you can show you have earned income for that, you can put that. So for both you and your wife, if you're eligible, you can put in $8,000 in your respective accounts. Next question relating to Linqto is, it seems everyone is excited about anything Musk related. I believe SpaceX is not publicly traded yet. How would a purchase look? Would we pick a dollar amount and have that available for whenever Musk decides to go public?
Yeah, that's right. So we would go out, we would buy shares in the company SpaceX, make them available on the platform, and they're going to be available at $2,500. And then after your first investment, it's a $5,000 minimum. And so the way that works, once a company does exit to the public markets, we'll give you the option to sell the shares for you on the public market at our first opportunity and give you the cash to your Linqto cash account, which you can withdraw or reinvest. Or if you wanted to continue holding the stock, we could actually send it to your brokerage account of choice. So if that's with an IRA, it would go to an IRA account that can hold public stocks.
And Just to be clear, everything on the Linqto platform, everything is still a private company. We don't offer or custody any publicly traded securities.
Okay. Our next question is, I think you touched briefly on secondary market, but what exit strategies are available for investors in private companies if that company does not go public? Is there a secondary market?
Yeah, that's kind of what Spencer was talking about a little bit earlier. So that's another one of the advantages of the Linqto platform. You do in certain times have the ability to sell your shares back on the platform. So right now, Linqto is providing liquidity to buy back those shares. So it's not always available to buy back each individual company, but there are times when, if you've been holding a company, I mean, for example, there's, Uphold as a company, a digital asset exchange. A lot of our investors bought at a very low value in the, 50 cents range. The company got up as high as $7 and was trading at, somewhere around $3. So it made sense for them. They wanted to trade, take some profits off the table. And in that case, we were actually buying back Uphold shares. So there will be times where we will be buying shares back for a private company while it's still private. And then, there's other times where it's not going to be, we're not going to be providing liquidity, but we hope to build out that liquidity feature, bring more market makers to the product, to the platform. So to increase that liquidity option.
And outside of a IPO or a merger and acquisition, I mean, there is the rare case where a company chooses to remain private that is still incredibly successful and is generating significant revenues, where they may look to either pay dividends to their private investors or just outright offer to buy those shares back from their investors. So that is a rare case. But as you said, yeah, much more, we are hoping for the exit opportunity through an IPO or a merger or acquisition. Absolutely.
Wonderful. There's a few more questions. It says, what market trends should investors be aware of when considering pre-IPO or private stocks?
Yeah, it's also a really good question. The market environment, if you look in 2021, I think we had record exits, record IPOs in 2021. And since then, we've really had a backlog of companies holding on, staying private a little bit longer. So, I mean, there's a couple of things that affect the IPO window. Typically, we'll see an IPO window kind of open up, and it takes a couple of leaders to go out, go public, get a nice valuation. So investors see that, the valuations are there in the public market, and now might be a good time to go public. So, following the trends, I mean, a big thing that's going to influence markets in general is going to be interest rates. If you look at previous IPO windows, typically they're happening when markets are at all-time highs, relatively low interest rate environment. So there's a couple of things that we look at. I mean, you could, ask 10 different economists and get 10 different answers on when the next IPO window will open up again. But what I'll say as far as trends, it does tend to go in sort of these IPO window periods where a window will open up. We'll see a exit volume hitting the public market, and then it will kind of die off a little bit and slow down. So we've been sort of in a slowdown since 2021, although we have seen some notable exits this year and a few late last year as well.
Okay, I think you answered this question already, but I'll just ask once more. The question is, what are the fees for investing through your platform? So there are Advanta-related fees to maintain or have an account with us. So you can see that on our fee schedule, our service is not the highest in the industry in terms of cost. It's not the lowest. Our focus is more so quality concierge style service. So it's really nominal. We can certainly talk about that, but Blair or Spencer, if you can kind of talk about your fee structure once more.
Yeah. So again, if you invest through our platform and you hold through an exit, whether that exit is an IPO or a merger or acquisition, we do not charge any fees. The only time that you would be hit through a fee through our platform is if you choose to sell a holding before it becomes publicly traded or it merges or is acquired by another company. For selling a company that is still private, we charge a 10% transaction fee.
Let's see, I think that covers most of the questions. If you have any additional questions, just go ahead and type those in the question box. Let me see if there's any other questions. I think that covers it. Blair, Spencer, any parting words before we disconnect? I again appreciate your time, just knowledge sharing on the simplicity of using your IRA to invest in a platform like Linqto if you're interested in private stocks. So any parting words?
Yeah, no part. Just wanted to say thank you for having us on today. For anyone in the audience who is interested in getting started, please don't hesitate to reach out to Spencer or I. Our contact information is at the end of the PowerPoint, or you can also schedule some time with us. But thanks again for having us.
Yeah, thanks,
You're
Reneika.
certainly welcome.
Our emails are easy. It's just spencer@linqto.com or blair@linqto.com. So feel free to reach out, visit the platform, and yeah, just let us know if you have any questions.
Sounds good. Again, thank you, audience. If you have any questions or need to know more about self-direction, again, always welcome to go to advantaira.com. You can give us a call, send me an email. We can, hop on a Zoom call and kind of talk through your scenario. And with that, I'll say happy investing, everyone.